Hey guys, welcome back to the channel. My name is Rob, and today we are talking about the top monthly dividend paying stocks. We're going to be talking about great companies today that pay you dividends monthly, which is important to a lot of people. So before we get into that, let me just let you know that I am not a financial advisor. Please do not take anything in this video as financial advice. Please do your own research and make your own decisions. So first of all, you have to ask yourself, why would someone want a monthly dividend paying stock that pays you each and every month? And for a lot of people, they want that stable, steady income monthly. And if you're one of those people, these are stocks that might do well in your portfolio. I did recently do a video on the top monthly dividend paying ETFs, such as JEPQ and JEPI, and those are ones that a lot of people are now getting into because it does give you some diversity to go in your portfolio along with these monthly dividend paying stocks, if that is something you're looking for. Now, if you're just reinvesting dividends each month and not really caring about the income, you don't really need monthly dividend paying stocks because that's not something that you're very worried about, but a lot of people are, and they want to look into some of these. So let's run down the top monthly dividend paying stocks that are out there. Jump right in with the first one, which is Agree Realty Corporation, ticker symbol ADC. Does have a dividend yield of 4.1%. Now, Agree Realty is a REIT. That's a real estate investment trust, and they lease properties to companies such as Walmart, Tractor Supply, and CVS, and then they make the income when those companies pay them rent on those leases. So it is a very stable business, a very good business to be in if you have good tenants. So I'm going to run over a couple of the reasons why this is a good investment, a couple of reasons why you may want to be a little bit cautious. We'll put those up on the screen for you. It does have a reliable dividend, 4.1%. Not the highest dividend out there, but it is a pretty safe and steady dividend, and it does have pretty defensive posture as a stock. Now, in the bear case for Agree Realty, I still do believe it is a little bit overvalued. I would rather pick this up a little bit under $70 per share. So I do love Agree Realty. I do want to add some. I don't have any right now, but I would like to get some in the 60-something dollar range. So let's move on to the next one, which is Realty Income. They also pay monthly. Most people know that. They are actually called the monthly dividend company. They kind of trademarked that and put that on there because that's just what they do, and they wanted to be known for that. So that is what they're known for. Now, they do the same thing as Agree Realty, but they're much bigger in size, and so that brings some advantages. That also brings some disadvantages. First of all, they do have a higher dividend yield, which is 5.83%, and that's very attractive to a lot of investors, especially retirees, who are looking to live off that dividend income on a monthly basis. They do have a couple of risks, though. One is that they're getting so big that it is becoming harder and harder to grow, and they're going to have to go outside of their comfort zone to keep growing on a yearly basis. So that's something you need to keep in mind. I do think Realty Income is attractively priced here in the mid $50 range. I think it kind of has been fluctuating between $50 and $60 all year. And so if you can get it on the lower end of that range, all the better for you. Next up is going to be Main Street Capital, which is ticker symbol MAIN. It is also a monthly dividend paying company. Now, it is a BDC. A BDC is what's known as a business development company, and they provide debt and equity capital to lower to middle tier companies, and that is how they make their money. So in the bear case here, you can see I do think this has got a little bit of a high valuation, and that is kind of what runs through a lot of these stocks right now in the market. A lot of these dividend payers are higher value than they were just a few months ago. And so if you're getting in, make sure you check the valuations. It is important the price you pay, because the price you pay is going to determine what your starting dividend yield is and how quickly that will go up with those dividend raises, hopefully each and every year. So this is a BDC. It is a great kind of best of breed of the BDC companies, and one that I really like. but just watch the valuation on that one as well. We have another monthly dividend paying stock here, and that is EPR Properties, ticker symbol EPR. They're also a REIT, but they do differ from some of the other REITs we've discussed on this channel in that they don't own residential, they don't own industrial, and they don't own places like Walmart or Tractor Supply. They own the buildings that house experiences, and those are companies like Topgolf and movie theaters like AMC and Regal Cinemas. So if you believe that the economy is going to support entertainment experiences, people going out and playing Topgolf, going to a lot of movies, then this would be a good investment. There are some people that think this is maybe on the way out because movie theaters might be struggling. They have been talking about that for a long time now. It still hasn't seen a full collapse, so we'll have to see how that works out. Factor that into your planning, though, when you're making an investment in EPR, that it is cyclical depending on the economy, depending on how many people want to go out and spend money to go to places like Topgolf or to the movie theaters. They do have leases with those companies, and they do make their money by those companies staying in business and being able to pay their rent. So very important to keep up with the times and see how it is going, and are people still going to be going out and experiencing things like Topgolf. Next up is Stag Industrial, and they do have a dividend yield of 4.33%. Now, they are also a REIT, but they do work in industrial properties, including warehouses that are leased to companies such as Amazon, FedEx, and XPO Logistics. They are across 40 states in the United States and have a valuation of $10.1 billion. They target mostly e-commerce and logistics demand. So this is a very interesting company. I do think there is a slight valuation concern here, as I said, with some of the other companies. So make sure you're buying this when it is at a good price. Also, the further down this list we get, the less sure I am about their dividend being safe. So you do want to make sure that you are happy with the financial situation of each of these companies. Next up is going to be GAIN, G-A-I-N is the ticker symbol. It is Gladstone Investment Corporation. They do offer a 6.55% dividend yield, and this is a BDC operating much like Maine. So kind of the two biggest BDCs, monthly payers that people do put their money in, are Maine and GAIN, which is easy to remember because they rhyme. So, and they are very similar companies. So this is very much like Maine. You just want to see which one might be more attractive to you, which one has a better valuation before you go ahead and make an investment. And then a couple of lesser known ones that are still monthly payers that people don't really talk about as much. First one is PECO, Phillips Edison and Company. And I think it doesn't get a lot of hype because the dividend yield is quite a bit lower at 3.58%. But they are also a REIT, and they own the buildings that house grocery stores. So think Kroger, Publix, Albertsons, and they do have a 97.2% occupancy rate. Grocery stores don't normally go out of business. They're kind of stable, and they do make for a good investment, but you are getting quite a bit smaller yield on this one. And I think that's where there's limited appeal for people, that the yield is so much lower that a lot of retirees looking for income, looking for monthly income, go ahead and overlook this one. If they were to bump that dividend, or if they were to get this price down a little bit and you could buy it at a little bit better valuation, this might be something to look at. Or if you're not that concerned about how high your yield is, that might also work for you. And then we've got APLE Hospitality. Not anything to do with Apple, the iPhone maker. This is APLE is the ticker symbol, and they are invested in hotels. So think Marriott, Hilton, Hyatt, properties like that. If you believe that hotels are going to be on the upswing, if travel is coming back and going to be doing well, then this is one that you might want to look at. The dividend yield is 8.28%. Now, over the years, I have been tracking this one. you haven't really seen a much price appreciation at all. In fact, you've seen price erosion. It is all the way down to $11.59. And this does become a very volatile stock. A lot of people do like it because it is a monthly paying and it is a pretty high yield, but it does come with some risk that some of the other stocks do not come with. So I would be interested to know, are there any other monthly dividend paying stocks that you own that you're looking into? Do you have any of these? These are basically, in my opinion, the top monthly dividend stocks. These have been pretty hot, pretty interesting to investors. It is changing a little bit now with JEPI and JEPQ coming out. A lot of investors are putting money into that. But this could be a good little portfolio to balance out that monthly paying with the ETFs, kind of combining the ETFs and the actual monthly paying dividend stocks. So guys, leave me a comment. If you like the video, please give me a like, subscribe to the channel if you haven't, and I will see you on the next video.